And we're back. This is episode 81 of the weekly LongVol Report videocast and podcast titled Jackson Hole and Small Caps. It has been an interesting week in the markets. We had a little bit of a scare, if you want to call it that, Monday, Tuesday. Everybody was freaking out, panicking about the market tops, which has been a theme literally for the past 2 or 3 weeks. It turned out we are probably going to get a rate cut September. Everybody's celebrating here on Friday as we get into the weekend. And we are going to talk about Jackson Hole small caps this week. We're also going to get into issue 33 of the weekly LongVol Report, which was titled The Bears Are Back in Town. I was trying to keep you guys calm this week if you guys read the report. In fact, a lot of you guys did. I got some emails this week from a lot of you that have made some serious money, not from the SPY, but from other names that we have talked about in the report. You guys have just made so much money, and it's just starting again. For those of you guys new here, I'm not talking about the S&P or the shiny object stocks. I'm talking about names that nobody's paying attention to. And some of those names are some small caps that we've invested into recently. Okay, so that's what we're going to get into this week on the show. For those of you guys new, you're welcome. My name's Dan Bustamante. I'm the founder of the LongVol Report. We publish that report each and every Sunday. You can get access to that PDF report with 30 plus ideas at longvolreport.com. There's a 21-day trial and a free sample of that report as well. I'm also the founder of Bustamante Capital Management. If you're accredited or you're a high net worth individual, we run a long short equity strategy for you through a separately managed account structure. If you're a potential investor down the road, there's information for you there. And that's that for the intro. Okay, some quick updates this week. I am going to be in Japan starting tomorrow, kind of a last minute trip. I'll be there for about 7 to 10 days. I'm going to fulfill a childhood dream of racing a Skyline R34 and a new GTR as well. I'll be with some friends of mine in Tokyo. If you guys have been to Tokyo before, if you have suggestions on food, anything I should do, first time there, let me know. I'll also be at the Tokyo Stock Exchange, which is fitting because we started to put money to work this year. We manage money, for those of you guys new here, for clients, and some of you that our clients watch and listen to this show. We started to put money to work in Japan earlier this year through ETFs and some other companies. I probably start to put more money to work at the end of the year in Q4 and in 2026 in Japanese equities. So it's only fitting that I'm going. So if you guys have recommendations on what to do in Japan outside of what I'm doing with the cars, let me know. And you can send them. There's a new tab here. Go to the contact tab and you can send them in here. Okay, so any recommendations, by the way, if you want to ask questions on the podcast, some of you guys have, it's easier using this form now. I've had somebody install this. Some of the questions get lost in Discord or email. At least this is in a form as well. Okay, questions on investment management are there as well if you're a potential investor down the road for us to manage your assets for you. Okay, so I will be in Japan. There may or may not be a show next week. I'm excited for this thing. Again, I used to be into cars a lot, really since I was a kid. Okay, I had a lot of cars when I was younger. I rebuilt a few cars in high school. I've had some pretty cool cars in my day, but the past 10 years I've been busy with business, working, traveling. So I'm going to start to get back into it. And for those of you that follow me privately on my social media, you might start to see some cool cars because I think I'm going to get into some cool things here soon. Okay, so I'm excited about that. Those are some updates. Let's get into this week's article and talk about the show this week and start with the top market headlines from this week. All right, so here's the headlines from this week. We always start with that report. The report this week was titled The Bears Are Back in Town. Okay, and my views this week were that the market still had steam left in it and that there were certain names that would be shorts. Two of those names that I talked about and highlighted in this weekend's report was HIMS and Oklo. Both paid off very well for readers this week. We've been a bull on HIMS, by the way, for those of you guys that try to shoot the messenger. Wait, I've been long HIMS back and forth from $6 a share. For me, it's a trading sardine. To be clear, what that means is I don't believe in the company long-term, but I'm happy to trade the 15, 20, 30% moves that it has, and that's what we've done for 3 years. The second name was Oklo. We've also been long that and short that. This week was a great move lower, and a lot of you made money on that, so congratulations on that. Second thing is this. Fed minutes came out this week. This was wrote yesterday on Thursday. They were a bit more hawkish than expected, and as we get into Jackson Hole, which we saw today, I would be surprised, I said, if he hints at not cutting, meaning he's probably going to hint at cutting, which they did. Again, I think they do. And we've positioned client portfolios in the fund for a basket of interest rate sensitive names from a few months back. Okay. For those of you that have been here, that have paid attention to the report, that we've put out, a lot of these names that we've positioned into, I've shared. I don't share everything with you guys. Number one, because again, you're not, if you're an investment management client, we manage money for you. I don't talk about everything we do. Number one, for proprietary reasons in portfolios. But number two, some of those ideas we keep for ourselves. Okay. So a lot of these names I did talk about with you guys in this show and in the report, a lot of those names were up. For example, Tree, Lending Tree was up pretty big today. I think like 10%. We cashed out about 20% on this particular name from a few weeks ago. A few other interest rate sensitive names we cashed on as well. So it's been a really good week for some of the short-term thematic investing names. And we haven't even got a rate cut yet. Okay, we're not even at the rate cut. We are going to get this rate cut. Everybody was freaking out this week. And the next point I want to get into is why I said everybody should just stay calm this week. And if you guys know my term, everybody remain calm, nobody panic. And we're going to make it out alive. Okay, that's what I say. And this is what I said this week in the report. I said this. I go, the question I have for all of you is this. How much money have you collectively made shorting market tops over the years? And by market tops, I mean the S&P. I've been in this business for 2 decades. Every year, there's somebody selling fear. A lot of you that found me 5 or 6 years ago, you went to Online Trading Academy. Pretty much every Online Trading Academy ever or again, no offense, but even some of the instructors that I met, some of them are great people, some of them I really didn't like. Their entire shtick was the markets are going to crash. What are you going to do with your retirement? It's the same shtick as Robert Kiyosaki, who's always like, the markets are going to crash. You better buy gold and silver. And then when it does pull back, he's like, I told you so. I told you so. This is a shtick. These people are actors. They're not real people putting on real risk. That's the reality. And if that's a red pill for you, I'm sorry to break it to you, but that's what it is. Okay. The second side of this is this. If you look at these macro folks out there, every year, these guys are on their whiteboards, scaring the shit out of you guys on YouTube, telling you the world's going to end because of national debt and yada, 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 yada. Yes. Are those issues real? Of course they are. Are they conducive to generating returns, which you all should be here to do? No. So when I look at this stuff from those perspectives, and I asked this question this week, the goal was not to poke fun, but the goal is try to get readers of this report to have a perspective shift. That perspective shift is this. I've made more money in my career shorting individual stocks. Whether it was Carvana in 2022, we issued a short report here on this report at 160. I shorted it to $30 and lower. Again, I didn't get long, unfortunately, but I made more money on that in the 7 figures. I made more money shorting HIMS for 20 or 30% for 2 or 3 days. I made more money shorting Oklo for 2 days on 10% moves than I have worrying about, is it a market top? I see this over and over and over. People are always calling for market tops. They point to this piece of data to curve fit their belief, and they lose out on ideas. Ideas like the small caps I'm going to talk about in this show this week. Ideas like Lending Tree, which was up 20% in the past few weeks. Ideas like Generac, which we talked about a few months ago. And ideas like Boeing, which I talked about in April with you guys in this show, which is up 56%. Okay. So the point this week was asking you guys to think from a different perspective and get out of this programming, which is really what it is in my view. And again, I'm not putting on the, tinfoil hat, so to speak, but if you look at everything objectively and are intellectually honest with yourself that is put to people today, most of it is doom and gloom nonsense. Okay. And that's what I said this week. There's an article or kind of a comic here of the bear, the bull, and the investor chilling back there. Okay. In issue 26 of this report, I titled it No Shortage of Ideas. I told you guys there's going to be more idea flow in this report in the back half of this year, back in June. I also told our investors, I wrote our second letter or Q2 report letter, and I said, look, we've obviously beat the indices this year. We've been 50% cash. That cash balance is going to come down in the back half of the year. It already has started to come down. It's come down into and traveled into select small mid-cap names, which have been up pretty big so far this week because I've seen it in portfolios. But number two, because they got emails from some of you guys as well. All right. So that's a big deal here. We've talked about some of these other thematic ideas in real estate, which have done well. And this is what I said to end the introduction last week of the report. So ignore the bears for a bit. They're going to get their time to shine, and so will all of you, because we are going to short some tech soon, which we will, and I'll talk about later, and maybe even make some money getting long the VIX, just not now. All right. And this is important to go through even this week on the website. Somebody emailed in, and I'll talk about it later. Yes, there's been changes on the website. Yes, there's been changes to the memberships. I'll talk about it later. But On Tuesday night, I put this post out there and I talked about the market highs. And the reason I use this Will Ferrell gif here is because everybody's freaking out after 2 days. And this is, again, going back to my whole point for the report this week and this part of the show, the introduction. If all you see in the markets are doom and gloom, you miss out on quality ideas, okay? It's not what we do. It's not what I've done in 2 decades of doing this business. We look for quality companies or certain situations to make money in, and that's what we've done, okay? So that was the report this week. If you don't have access to it and you want to be a subscriber, go to the website, the very top, click this link. You can get a free sample. There is a 21-day trial. It's not a free trial, to be clear, and to be real blunt with it. Look, we put skin in the game by writing this every week with our team. It's not a lot of money. Put skin in the game. You get it for 21 days, and maybe you'll get away from the doom and gloomer nonsense. All right? So that's that there. This was posted yesterday. The August September rate cut have now tumbled with emojis scaring you again. Freaking out. Okay, who cares? Okay, this is what I mean. A lot of this stuff is just nonsense. All right, a lot of this stuff is just media narrative over and over and over and over. And this is why I don't like the macro guys out there. You guys know my feeling on them that follow me on Twitter. You know, if for once you guys ever sold anything that was positive, I'd buy your shtick. But you guys don't. You guys always sell fear, 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 fear. And never once to any of you guys, and I don't want to blanket statement this, but very rarely I should say, do you guys provide actionable investment ideas? Tell me for once, do this. These are the soft targets. These are my views. But instead it's, if this does this, it's the end of the world. And if this does this, you know, it's nonsense. And I'm tired of hearing about it. The point is we're probably going to get a rate cut September, and that's that. Okay, so we don't really look at macro here and there. Obviously, coming into the Fed rate cut, we owned a basket of interest rate sensitive names in portfolios for clients. I sold some of them today, not all of them. Okay, we made a good deal of money in those names, and we'll continue to own some more of them. My view is this: I think there's going to be a shakeout on some of these real estate names before the actual cut. There always is. All right, and I may or may not load back up. Again, I'll keep that close to the chest. Speaking of our portfolio, this week, Business Insider, one of the journalists, emailed. He asked me to comment on Michael Burry's positions. He asked why Michael Burry took these positions, in my view, obviously subjective opinion, and number two, what my views are on the options that he used. All right, this fit right up my alley. This fit right up my alley because one of the positions that he took was in VF Corporation. We've talked about this company for about a year and a half. For those of you that are new here, I do invest in turnarounds. In 2020, I went in as an investor and the interim CEO to invest in a company called Jack Race, which actually makes shoes, by the way, and clothing. This isn't one of the shirts, but they were golf shirts. So I have experience in doing this. I like the frameworks of turnarounds. And when he said this, I jumped at the chance to talk about it. Okay. So thank you for him for emailing to include me. And he might be including me in another piece on real estate because I shared some very strong views there. Let's just say that. And I might be in another piece of them. Okay. So here's what I said. Burry appears to have bet on several embattled companies to stage comebacks, yada, yada. Dan said whatever. The fund manager said Estee Lauder, which he invested in, VF Corporation, owner of North Face, are genuine turnaround plays, as the beauty giant's new CEO is working to cut costs and revitalize China's sales, while the new bosses of VF are trying to revive its street fashion brands and to cut van costs as well. All right. So I don't know why you put this in quotations. The reality is both of these are genuine turnarounds. It's literally what they are. If you were to go to Harvard Business School, anywhere, these are turnaround situations. Every turnaround situation, again, they're nuanced, but there's a set of frameworks we're paying attention to. It's no different with these companies. And so his question was, why do I think he's investing in? That's why I think he's doing it, because they're turnarounds. Look, I could be wrong. I'm not Michael Burry. He might have flipped a coin. Who knows? All right. The second thing I said, I'm not that confident in his position. And Lululemon, again, who cares what I think? Michael Burry doesn't care what I think. But I don't think Lululemon is the play. Now, it might bounce 20%, 30%. Who knows? We're already invested in a similar brand in VF Corporation. The reason I don't like, and the reason I shared with Business Insider this week, is real simple. Lululemon lost Suncho, one of their, I don't know if she was product designer. I forget the exact role she had. They lost her to VF Corporation, okay? And this is a big deal for that company. When I saw her presentation earlier this year, she was at one of their investor days at VF Corporation. I was listening to her story, number one. But number two, I was looking at her vision for Vans. Now, obviously, it's subjective when you look at these things. And you're like, look, do I believe in this? What I do believe in is I know she did a really good job at Lululemon in years past based on their stock price and the brands or the sector she was running. So what I said to him was this: I'm a basketball fan, and I go, look, losing her is the equivalent to losing Steph Curry to another team. So if they lost somebody like her to, VF Corporation, I don't necessarily want to own that brand. Do I think Lululemon could bounce for a short-term trade? Of course I do. But in the long term, again, I think she's going to do a great job at VF Corporation. All right. So that's what I said there. The next thing he asked me about was this. He goes, what do you think about the options that he used? Obviously, this is pretty subjective as well. My views are pretty simple. I go, he's playing it the right manner from both a risk perspective and a potential return view. And the reason I said this is pretty straightforward. Obviously, in turnarounds, there's always a chance that they don't work. In certain situations, again, maybe China doesn't improve. And that's part of Estee Lauder's situation. The second part is VF Corporation. Again, I don't think it's going to happen, but there's always a slim chance that you can't calculate for that maybe Vans doesn't come back to life. All right. So maybe he looked at it from the perspective of, if this works, it's a 2 or 3 bagger, which again, that's my view, to be clear. So maybe I don't, want to risk the capital if it doesn't work, because maybe it doesn't, it stays stagnant. So I think he took the options view because of that. But number 2 is because of the asymmetry. Last year, we took a position in this company. When it got to 26s in Q1 this year, I sold a lot of it. I kept some of it. Obviously, the tariffs came out. We had that big day where Trump suspended the tariffs and we rallied. I sold a lot of the position. As this last earnings came out, I took the opportunity to sell more equity on that gap up. Our average cost basis is around $13 a share. What I ended up doing is very similar to what he did days after. I bought a lot of long-term options on VF Corporation. Not because I'm not confident in the idea. On the contrary, but because I believe if they get this right, you're back at $25, $30 a share by Q2. Okay, those are my views on this. But if I don't get it right, and let's say I'm wrong and there's something I didn't calculate, which always happens in investing, I know that I have a fixed cost in this particular position. All right. The final thing I'm going to leave you guys with is this kind of is a question that came in this week about books I've read in the past. Since we're talking about Michael Burry, 15 years ago, I read a book by Joel Greenblatt. Joel Greenblatt is an investor. He was also a teacher, by the way, at Columbia. If you go to YouTube, type in Joel Greenblatt, Columbia Lectures, watch everything he talks about. If you want to learn about value investing, watch it 10 times, all right? Obviously exaggeration. But I read his book, You Can Be a Stock Market Genius. And in that book, it gave me perspective change. That iteration of looking at how he looked at leaps made sense to me. And there's things that I've read in my career, I've learned from different bosses I've worked with, that I don't agree with. And there might be stuff in this show that you guys watch that you don't agree. You don't have to. The point is, as you get through your investing career, you're going to take tidbits, and those tidbits start to form your investment views. And in that book, You Can Be a Stock Market Genius, he talked about leaps with spinoffs and turnarounds, and I think it's a good book to read. All right? So I'm going to leave that there with you guys in the comments this week with BI. Again, if they post this interview, I might do with them about real estate. I'll talk about it in a few weeks. All right. So that's that there. Let's get into next piece of data. This is from Bar Chart. Let's talk about this. All right. Every time I see this stuff, it gets hundreds of thousands of views. Okay. And this is what I mean by perspective shift. And you guys hear me use the term NPCs. If you don't know what NPC is, Google it. You'll get what I'm saying. People love looking at stuff like this, and they extrapolate it into so many things. I look at stuff like this and go, these guys are idiots. They're wrong. They're dead wrong. And you might look at this like, oh, this guy's brash. He's crass by saying, I don't think I am. Most of the time, when people are on one side of a position, you want to be on the opposite side. And this is not the time to be short small cap. And you saw it today with the Russell 2000, other names as well. And one of the things I talked about a few weeks ago was you want to start paying attention to small caps. And not just 2 weeks ago, by the way. I talked about this with those of you that have been here for a year or so. I talked about it last December when I gave you my views for 2025. One of the views I talked about, and again, I don't think this is rocket science. I think it's pretty well accepted that in this rate cut cycle, small and mid caps will boom. The problem is this. A lot of small cap and mid cap companies are not profitable. The second problem is this, and this is a you problem, not a general problem for the masses, is most people don't do the work. They don't do the work. Again, what do they buy? They buy the NVIDIAs, they buy the Microsofts, they buy the MicroStrategies, they buy the 0DTE options. That's their view of investing. We do the work because we're after abnormal returns when we're putting money to work. There was a position we had. I'm not going to share it with you guys in the show. We didn't have it in the report. I put it on about 4 months ago. We were up like 30 or 40% into earnings. I sold it. Literally had earnings 3 weeks ago. I sold it on that. I rebought it again. We were up like 40% in the past 2 weeks, and I sold some of it yesterday. That was a small cap. I'm not a small cap investor. I don't claim to be. Again, I don't paint ourselves in a corner. The way we invest in capital markets is we're pretty much agnostic across every sector, as long as I understand the company and the framework. Again, we don't bet on growth companies. I will trade growth companies, but this particular company caught our attention. The second small cap company that caught our attention, I shared with you guys in the report, I think 3 months ago. The company was called Astronics, ticker symbol ATRO. Now, again, some of you guys, I'll tell you how ridiculous this is. And this is a real world example. Okay, I sent this to a group of folks who are on an email thread that I'm on. And he goes, this chart looks like it ran. I go, yeah, it ran. Okay, have you looked at anything else? No. Are you going to look at anything else? No. You have an opinion on it? Of course. Okay, and it happens every single time. This company is a genuine turnaround to growth story. And again, I wrote a piece this week in the blog. I'll pull it up in a second. But for those of you that are technicians only, number one is, why did this happen? I talked about it in the piece this week. I wrote an investment thesis. When you subscribe to the report, you get the blog as well. They had a huge slowdown here during COVID, right? This is a company that supplies a lot of parts for aerospace divisions, a lot of Boeing parts. Obviously, there's a slowdown. They lost a lot of money. They had to go through a turnaround phase. This is their turnaround phase. This here is now their inflection phase, meaning, actually, let's just do it this way. Okay, let's do my real world example of turning that golf company around. This is a golf company that went bankrupt. This is me coming in, getting back with old suppliers, bringing new employees in, right? Getting the company capitalized, getting the warehouse back alive. And some of you were around in 2020 and my friends and saw my social media, and I shared this story. You guys, you'd see me working on this company literally on my social media. You're fixing the warehouse. You're getting suppliers back from China. You're dealing with graphic design. You're fixing the company, and you're trying to get free cash flow to work. And then once it works, it hockey sticks. This is what this story is right now. But people look at this and like, oh, this stock's already up 110%. Like, why would I invest in this? Now, obviously, we all want to get the bottom. The reality is you're not going to, okay? I wish you could. I wish we all could, but you're not going to catch the bottom. The point is, this is a small cap company. Again, this is opinion. Do your own work on this. That I think, sorry, that's a delayed platform I have here. And it's on a different time zone. It's just, you rung the bell, okay? I wrote this piece this week. This is on the blog called Astronics Turnaround to Growth. You guys can read it here. I said, have you heard of it? Probably not. We found this company. We were researching Boeing. So earlier this year, we had a big call on Boeing at 135, 140 a share. When I was going through Boeing's, all of their stuff, I found some of their suppliers. This is one of their supply companies. I went through it. I tried to figure out, why did they lose this money? I was going through some of the company data on here. In 2023, 2024, and 2022, 10 to 12% of this company's gross revenue, came from Boeing. A lot of that is going to continue. They're winning more contracts with Boeing. As Boeing starts to fix their problems, so does this company, all right? So there's an ebb and flow with this. We like this company because it gives a small cap exposure, and I talked about it here in this piece, okay? You guys can read this. They have a massive sales backlog of $645 million. $574 million is attributed to the aerospace division. Given the turnaround in Boeing, their 737 MAX production and other lines, this company will continue to benefit. Gross profit margin also expands. And again, I know this is foreign to some folks out there. I'm going to pull it up here because you would think that, if I can pull this up here, let me find it. You would think that working in this business, and I was on a group of email with some folks talking about this, you would think that working in this business, some of these guys would look at the balance sheet and income statement, but they don't, okay? Just like I mentioned at the start of this show, they follow the herd, and they're like sheep, and the new quote is, just like Gordon Gekko said, sheep get slaughtered. This is just starting to inflect, as is this. The debt's dropping, and revenues are increasing, okay? So this is a company that was in trouble. It's not in trouble anymore, right? Obviously, we didn't catch it at the exact bottom. I think our average is like 28s, but I'm okay with that, okay? And we own this position. I've talked about it. This is another example of a small cap So when we go back and we look at stuff like this, pay attention to it, because this never tells the proper story. It's just more sensational nonsense. And if you're not doing the work or you're not paying attention, which most people just refuse to do, that you don't get returns. As simple as that sounds, that's the reality. And most people don't do the work, even financial professionals, financial advisors. And again, I'm sorry to say it, that's just a reality. They don't do the work because people are just sitting there and sensationalizing market tops. And I'll leave it there before I go on a big rant. All right, so that's that there. You guys can read it. If you subscribe to the report, you get it, so you can click the piece. It's on the blog. All right, next post, Celsius Energy. I talked about this 3 weeks ago with you guys, maybe longer, about a month ago with you guys on this. Normally, we don't invest into companies like this, primarily because this fits into the 3Fs rule. I learned this very young in my career from a mentor. The 3Fs are fads, frauds, and failures. I'm not saying Celsius is a fraud or a failure. What I'm saying, it's probably a fad. You can see this in the energy drink space. Look, I don't like investing in stuff like this. It's great for insiders and if you owned it pre-IPO. But they made an acquisition earlier this year in a company called Alani Nu. This was an earnings report. Obviously, if you guys read the earnings report, this thing was up huge. We own this for a short-term trade. I think we made like 20% because we bought it a little bit before this pullback on the equity, maybe 25. What difference does it make? And a lot of money on the long-term options. This was a big deal for us. We talked about it in the report. Again, do I think it has more to go? Somebody asked this week. I don't know. All right. This was a trading sardine for us. It's not a long-term investment. It doesn't fit our framework of what we do to manage money for clients. All right. But nonetheless, this is a good position to take note of. All right. This is new to the article here. I'm going to skip this. You guys can read through that. Let's get through stock charts and commentary and go through a few ideas here. All right, so let's go through a few ideas this week. Oklo was a best ideas in the report. For those of you who don't use the report, this report's pretty in depth, all right? But typically what I do is I write the ideas I care about this week. Again, by the way, this just fired off today. Huge. This is going to be such a good position. And so is this, by the way. And so is this. And so is all this stuff. For those of you guys out there who stayed patient and you didn't freak out on Tuesday because you're a doomer and gloomer, then you're going to be fine, okay? But if you keep listening to these guys about macro and Robert Kiyosaki's telling you guys to be fearful, then you're going to be afraid, okay? So this thing was a great short this week on Oklo. We made some good money on this. So was HIMS this week. And again, there's a lot of issues with this company short term. For those of you guys, I had a question that asked me this week in the room, you know, if I was going to buy this leaps on this long term. Here's my answer to you on this. I don't invest in growth companies like this. I can't see the future. I don't know what the future is going to be for weight loss drugs. Okay. Now we can all sit here and pretend we do and read data and some, you know, you get these articles that come out. Like we did a study. You can read all this stuff. I don't believe half of it anyway, the stuff that comes out. But number two, it's much easier for me to trade this stuff. And this is really important. Again, if I'm red pilling a lot of you this week that are listening, or your potential investor with us down in the future, why would I, again, this is real because we've done this for 2 years in this company for 6 months. Why would I sit through buying, and we've done this. Why would I sit through buying this and be like, you know, I'm holding this to 100. Why would I sit through this run up and wait for the pullback? Or why would I sit through this run up and not short this and be like, I'm gonna wait. I'm gonna be up $3 million, let it go back to break even, and be like, I'm a long-term investor. That's narrative. It's not what we do. If we're up a large amount of money, we're booking the gains. Now, a lot of you will say, well, what about the tax implications? Okay, all right. That's a good position to be in if you have that problem. A lot of the stuff we do, for the most part, all right, doesn't have short-term tax implications. And obviously, as we go through working with clients, depending on your account, et cetera, there's things you can do. The point I'm making with this is I don't know the future of this company. I'm not going to bet on the future of this company. I will trade this company. It's easier for me to look at a company like Astronics and understand this company's been around a long, long time. They've had good runs and good cycles. They've been through peaks and through troughs. This was a trough. This trough is likely going, and that like this is inflected. It's making moves. It's easier for me to understand this business model and then put large amounts of money to work in ideas like this versus guessing at the future. And again, some people get it right. They make a lot of money, but usually the folks that guess at growth companies, once they make a lot of money, inevitably end up always giving it back. All right. You heard this story 1,000 times, and that's not what we do. We compound money year after year after year, betting on things that we know and that have been tried and true, so to speak. All right. So that's ATR. I already talked about that. I'm going to skip that part there. Let me get into the final part this week. Again, these shows are going to be shorter and shorter, and it'll be better for you guys, all depending on your Q&A. And again, if you have questions, you can send them in here on this contact tab. Okay, so let's go to some of the questions this week. There was a question that got sent in on the contact tab this morning. The first, and this is going to address everybody. Okay, the question was, what did his membership include? All right, number one, if you click on this, this has changed. Earlier this year, this blog was $29. We were testing something against my judgment. We were testing something. I didn't like it. I ended it 2 weeks ago. We got rid of the blog only. So that membership is no longer available. If you guys subscribe to it and you're paying like $29, you're going to probably get an email from us saying you have a chance to upgrade or we're canceling them. They're no longer available. Number two, the membership includes access to the blog and a lot of these premium pieces. So the other thing was this, and I said it earlier in the show this week, there are member-only posts here. There's a lot. Like on speculating on stocks, like a framework for that. You know, lessons I learned from this guy on how to bet, right? Think about portfolio structuring. Not that I've taken everything from him, but I look at Phil Ivey, for example, and I don't want to go off on a tangent. And I watched this documentary about how he would manage his bankroll. And I go, that's interesting. Maybe I can take a few things from that. Or there's a thing here on how to handle portfolio. If you're somebody that's running $500,000, $2-3 million, and you're not just betting directionally on HIMS with all your money, and you're thinking about portfolio construction from a very granular perspective, there's a section on that. All right. So there's a lot of stuff there the membership gets you. But yes, there have been changes to all of this. The changes will be for the better for us, for everybody here. And yeah, there is changes to this, but this is what you get. You get access to the weekly report, the best ideas section, the educational content. Again, I just showed you the ATRO thesis. You guys can use that. And yeah, this is it. This is what you get access to. It's not generic, $7 slop that's just regurgitated nonsense, which, look, let's be real blunt this week, like I always am. Most of the stuff out there is generic slop. I'm not interested in writing generic slop. I'm not interested in having 50,000 subscribers. I put out good content that I would use, that our readers use, and that our potential clients would look at and say, hey, look, these guys know what they're doing. I want to work with them in the future because I don't have the time to do it. Let me put our money with people that do this so I can go out and golf or do whatever it is that I do. All right. So that was the first question there. The second question that came in was on Discord. Again, if you guys send them in, it's easier for me to follow. There was here. Appreciate the YouTube. To be honest, it's cool seeing your mental models. Do you know if there are any books you recommend? Also, another question, do you use the whole moving average, HMA? I don't know what the HMA is, honestly. I don't use indicators. I know you guys see that moving average on my chart. But it's just because I'm curious to where the 200-day is, because I know other people watch it, but I don't look at any of that stuff at all. When we did the analysis on this, my analysis, this is really important. My analysis process did not start with me doing this. And I'm not making fun. I'm just showing you guys. It didn't start with this. That's not what it starts with. Okay, it starts with, and I mean this when I say it, going to figure out why did this happen? And then once we understand, and where do you find that out, okay? You don't find that out by reading a Yahoo Finance article, and let me tell you why. You don't find it out there because the guy writing the Yahoo Finance article is writing a Yahoo Finance article because that's what he's paid to do, not because he's investing in the company. So where do you go and find this information? This is really important. Again, for those of you out there that are learning from this show, that get value from this show, you go to the website. All right, I'm not being sarcastic when I say this, but a lot of this stuff should be obvious. But again, going back to this, I feel for a lot of you that have had to deal with people that are popular charlatans on YouTube telling you guys they're nonsense and confusing you guys and pretend it's truth. You go here, and you read this stuff and you understand, why is this company, I know this is a long answer to your question, but I'm helping you because if you're asking about that, you have questions and other technical indicators. And I'm not saying it doesn't work. What I'm saying is the process for investment idea generation should start by understanding why. And this is literally from their website, by the way. All right. What does this say? It says recovery is complete, entering the next phase of growth. So not only did they tell you they were doing the recovery, but then they're going through growth. Well, why are they going through growth? Why did they fail? It tells you. Okay. What did they do to fix this? It tells you. Now, your job, again, maybe that indicator helps you for soft target exits. I don't know. Okay. But the point is, I don't look at any of that stuff at all. I just don't. At a very basic level from price action, yeah, I do use support resistance levels. I think that's pretty well accepted and they work. But again, everything is nuanced and granular. It's not just like it goes here. I'll leave it there. All right. Second question, you said, any books I recommend? Yeah, look, we used to have a recommended book reading list in this. I don't think we still do. I think we took it out. Number one, we took it out. Number one, you should read all this. If you subscribe to the report, which all of you should, and don't, again, there's a lot here. There's so much value in this. You couldn't get through all of it in a weekend, is what I'm saying. Number one, read this stuff. All right. So these are my views on these specific topics, on implied volatility, on how to think about and executing a trade. Again, this is really important. One of the things that's not talked about in books, for those of you listening this week, is how do you take an investment idea and then structure it for maximum P&L. Everybody just buy, and again, it's easy to buy the shares, but as you get better and better at this business, and the longer you do this, you figure out, look, I can start to make a lot more by structuring my or expressing my view this way. Just like I talked about earlier with Michael Burry in VFC. Again, he's seen the situation to use long-term options. It's probably what he's doing. He's thinking about a different way. So read that book. The second one I would read is anything from Howard Marks from Oak Tree Capital Management. I'm not a big fan of macro, but his book has helped me. That'd be the second one. Yeah, then other than that, I don't know. I mean, there's not a lot of books out there that I really like in the trading space because most of them they just don't teach you what I think should be taught. The best way I would say is if you're still young and time, get a CFA. If that doesn't work, get an internship or go work at a firm. If you can't do that, I don't know. Read the book that I mentioned with Joel Greenblatt is what I would say. Okay, so that's that. There's somebody else said. Thank you. I can't wait to learn about deep in the money options. When's the upload? We're doing it tomorrow. I thought you were no ball guy. The gift ball guy. What are the requirements for joining your fund? There's information on the website. If you're a prospective investor, it's all there. You have to be accredited, number one, and number two, you need to meet the investment minimum, which is $500,000. It'll probably be moving up to $1 million next year, but right now it's $500,000. So those are the requirements. Happy to have you. Just go to the website. You can fill out the form on the site, and we can discuss. Let's see what else here. It's not a fund, by the way. I have to be clear. They're SMAs. There's one more question that came in. Where is it at? Beta Roaster. Hey, Dan, great call on ATRO. I read your piece this week and how you found it. Is that something you normally do by looking at companies and try to figure out if there's any beneficiaries? Number two, I know you don't do this, but can you give me a price target on this? No worries if you can't. My answer is this to you. Do I do that where I find other companies? Yes. Okay. If I'm taking a theme of something, for example, like Boeing, it was beaten down pretty bad for I don't know, quite a while. And if I think there's a theme there, I try to extrapolate that theme out and figure out what other things could be affected by that. And then you just go through and try to figure out. It takes a lot of work because you probably go through 20 no's to find one yes. But yeah, I do that a lot. Price target. Look, I can't give you one. I don't know. I mean, I can't. I just can't do it. I'll tell you this. So no, don't do that. 52-week breakouts coming. I know Look, I don't care about that stuff too much. I know some folks do. All I'm saying is, if you got a good entry on this, I think we're up. What are we up this week? This is 10% this week. Look, it's not nothing, but I think we have more to go. I'll say that. All right. So that's that there. Let me move on. There are more questions this week on stocks to look at. I'll go through them quickly with you guys. Look, we're at 40 minutes. Nice. I like these new shows because it'll be easier for me to do and not spend 2 hours. Don't care about BAC. Somebody pitched that. Don't want that. MTH. Okay. Let's look at MTH. What do these guys do? Now, by the way, I'm reading these ones from people in our community that asked me to look at them. And going forward, if you're a subscriber to the report, I will only be answering your guys' questions. If you're not a subscriber to the report, I'm not answering the questions. You have to be a subscriber just going forward. I've given so much value away the past 2 years, and I think I still do, but we're changing a lot of that. Okay, so MTH, what do I think about this? Monthly looks pretty good. What do they do? Meritage Homes. Oh, why didn't I didn't even see it. That's how. Look, what do I say on this? I said it before. I think it's probably good for a trade. I don't want to own it. Don't care. There's other interest rate sensitive names I care about. I don't want to own that. No offense. I just don't care about that. Where's the other? I'm looking for the Discord where you guys ask these questions. I can just use this. Don't care about that one. It's TOST. A lot of restaurants use this POS system. Maybe something to look into. Chart is bullish. TOST. Small cap. No, I want small cap idea flow. I don't care. I'm not against. I have too much exposure already on some of this other stuff. I just don't care about it. Look, I don't know. I mean, maybe we'll look at it. I don't know. Off first glance, no. I don't like Yeti just consolidated for 2 to 3 years after it lost about 70% market value. Charts I haven't checked. All right, now this has got my attention. Yeti lost market value. Let's look at this. So they got smoked. Why is that down? Net debt's down. What's up with this? Fix. I know what these guys do. Answer to this without going into too much on this is soft yes to look into. Yeah, so Charlie's watched. Add this to the report this weekend. Add put this down in the spec sits core monitor. Let's add it to there. Add it to there. Let's add it. I'm gonna go and figure out what's happening here, but everything else looks fine at first glance. Okay, so let's add that. TMH, TMHC. I don't want to own BAC. I don't like BAC because I'd rather own KKR or like Houlihan Lokey, which are investment banks, because M&A activity will pick up, And we already own KKR for just telling you guys full disclosure. We own that already. So there's financials I do want to own. I just don't want to own Bank of America. Not for any personal reasons, but there's better ways to express the view. BLP, what do these guys do? School buses? This is a small cap. I don't know. I mean, I don't know anything about that business. I'm not gonna say hard no to it. I'll first look. I would skip it and do other work on other names. This one, hard no. I can instantly tell you that I'm not interested in that. That's already up dramatically. Hard no. AAP, already talked about. Don't care about that. ABG. This looks good. Good. What are we got going on here? No thanks. Russia. This gives me FOMO. I owned RSX when they invaded. I owned Leap options. By the way, here's another example that I think about it. Why Leap options are good for asymmetry. I owned when Russia invaded Ukraine. I was like, oh, this is going to end. That'd be a big deal. RSX, the ticker symbol, was a Russia ETF, was down big. I bought Leap options 2 years out. They delisted it. I lost all my premium. That's a great lesson and ideas that you put into to not lose all your capital, but a small amount. Because if I got it right, we made some money. If not, I lost a little bit. And I wasn't, bankrupt. Okay, this is what happened here. What do these guys do? Market that. So this is good. Let's see what's up with this. Why am I? Rush? Is this Rush, the truck company? Well, I know this company. Okay, add this to the report. Actually, wait. I know this company because I have a friend of mine whose son works for them in Phoenix. He sold a trash company to Waste Connections a few years ago for $45 million. And he did a lot of work with Rush. And he got his son a job there. That's why I know this company. I do know this, okay? Yeah, add this to the swing monitor, and we'll start looking at this. I like this, and I'll start doing the work on this. But let's add this. Let's add RUSHA for sure, 100%. Don't. In fact, I'm going to write you a note on this one because this one does, at first glance, get me excited. All right. And I'll do the work on this one tomorrow or on the plane ride to Japan tomorrow night. All right, whoever found that one, I owe you lunch because I have a feeling I'm going to make money on this thing. And Trazi, I owe you lunch, so hit me up. Or was it Ed? Whatever, Ed or whenever you guys found this, send it all. I can just look, first glance, I like that. I'm going to do the work on it. I don't want to get a bias, but I like it. GPI. Did we look at this already? Sorry, yeah, both of you wrote a few of the same ideas here. VC, I don't know what VC does. Industry, auto components. So we like this. Let's see. I like the theme here of used cars. I got a website. So they make the LED clusters. What else do they do? Strong for example, 6 billion filter. By the way, I had a friend who had one of these in a new Range Rover 2 years ago. I'm just a true, literally like 3 days after we were leaving lunch and the whole dash froze. You like turned the car, I mean, you couldn't see anything, okay? Turned it off, back on. I don't know if I'm a fan of this stuff, but I remember that it's safe to say he doesn't have a Range Rover anymore. He got rid of it. No, I don't care about that. Why is give me this? The answer to this is tentatively yes. But not because of the financials, but tentatively yes. I don't know that we'll add this to report, but I'm going to look into this VC. Look into more because I like the car parts automobile components sector right now for a lot of reasons. We owned a company in the auto parts sector. There's a recent that I found from years ago from Carvana situation. Again, there goes another example of one investment reminded me of another thing. I don't know. We'll put this in a report, but I like this short term because of that, and it's a small cap. I need more small cap exposure. I like that. Okay, so we'll keep that there. I think that's it. TMHC is another one you guys posted. TMHC. So this is good. If no, I don't care about this. No, I'm not interested in home builders. No dice. I think they're good trades. I'm not interested. That's it. There's nothing else. No, there's one more. I'm lying again. AAON. AAON. This is why that form will be easier because you guys, there's in that to do research in the Discord. There's messages and the messages, and I miss them. So, what are these guys? Building products. For what though? I don't like this right off the bat. The P. I'm not a fan of that, but let's not judge a book by its cover. Ew. What's up with this? What do these guys do? What is going on here? I'm going to say no to this. But I might go back and look at it down the road. I think out of this idea, Russia, VC, and Yeti. So we got 3 out of like 7 that I'll start looking into. Okay. So make sure we add Russia, Yeti, and VC to the report over the weekend. I'll do the rest of the work on them, but let's make sure we add those. Okay. That's it for questions this week. A little bit longer, like I said, but that's a good session. Again, if you guys have questions and you are a subscriber to the report, you can go to here, go to the contact tab, submit the questions there, or DM me. If you're already a reader and you don't want to use this, I get it. Just send me a DM because, like I said, they get lost. You just saw it happen in the To Do Research channel, and I miss them. All right. So that's it for this week's podcast and video cast, issue 81. Jackson Hole and small caps. For those of you guys that are not subscribers, again, you can go to longvolreport.com. There's a Swing Alerts membership that is not research, but we do the research and there's information there. To get access to the LongVol Report, yes, like I said, there have been changes. You can download a free sample. There's a 21-day trial offer. There's 2 different options for you guys to go through the report. There's obviously the quarterly option and the yearly option as well. And that's going to do it for me for this week's show. I'll be in Japan next week. Like I said, I'm not sure if we're going to get a show out. Hopefully I do. If I don't, enjoy this week's show. We will get a report out on Sunday. I'll promise you guys that. I'll have the report out for you guys. And again, congratulations this week for those of you guys made money. I'll see you guys next week.
Thanks for listening to this episode of the LongVol Report with your host, Dan Bustamante. Make sure to like and subscribe on your favorite podcast platform so that you never miss an episode.